So, Jean, we're going to go to you with story number two. It's coming out of CNBC. I'll read you the headline, read you the first couple points, and then I'll ask you to comment on the headline. Home sales fall again in July as supply drops to near quarter-century low. The key points from CNBC: the median price of a home sold in July was $406,700, an increase of 1.9% over July of 2022. Point number two: sales fell month to month in all regions except the West, where they gained 2.7%. Sales fell most in the Northeast, down 5.9%. And point number three: there were 1.1 million homes for sale at the end of July, 14.6% fewer than July 2022, and about half of the pre-COVID supply. John, what do you make of this? Last week we talked about home builder sentiment was going south because of rising interest rates, because of construction costs, the materials involved with construction, as well as labor challenges. And now we're finding that home sales actually fell year over year. Granted, 2022 might have been a record time. We were just coming out of the pandemic. A lot of people were still, they had cash in their pocket, whether they were working from home and they weren't spending as much, or they're getting all those incentives and benefits that were distributed by the U.S. government. So what do you make of this latest story?
Well, I mean, this has been going on for the last 6 months. I mean, and South Florida, no exception. I mean, year over year, sales have been dropping, high single digit to low double digit percentage points. And, obviously limited supply, rising interest rates. The interesting thing to me is that the latest sales decline comes on the heels of contracts that were signed probably, May or June.
Yes.
And since in the last couple of weeks, I don't know if you've noticed, but mortgage rates have really spiked up, due in large part to the fact that the benchmark 10-year treasury is up significantly. So, I mean, I think we're in for a whole lot more of the same, because at this point, the only people who can afford to buy a home now are, people in the one percenters, and people who have cash. If you have cash, you don't have to deal with mortgages. So, I think we're going to be in a really slow period. Now, what's I've been sort of thinking about now is month after month of sales declines. I'm wondering, what's going to happen with all these brokerages, these residential brokers. And my suspicion is that we're going to start seeing a lot of consolidation in the residential brokerage industry because they can't keep bleeding like this. I mean, we've already had some news of layoffs, in residential real estate, brokerage companies. I mean, I'm not quite sure like how many more months of this sort of downturn they can handle because there's nothing on the shelf. There's nothing to sell. And people aren't buying and people aren't selling. So, I think we're going to see a shakeout in the residential brokerage industry. And I would anticipate 4 years in, we're going to see some of that here in South Florida.
And let me point out to the public, generally speaking, and there's no collusion in real estate, but generally speaking, when a listing broker tries to get your home and put it up for sale and put it in the multiple listing service, that database, generally speaking, it's about a 6% commission is what they're going to offer to the market. As times get tough or it gets more competitive, they tend to reduce it, but that 6% will typically be 3 points to the sell side, 3 points to the buy side. Now let's let's say a typical house down here is what, $500,000, $600,000, $700,000. So that gives you an idea how much the real estate commission will be. Now let's contrast that to the rental market. The rental market, it's typically a 10% commission, but that's based off of the gross annual rent. So somebody's paying $1,000 for a unit per month, 12 months in a year, you're looking at 12 grand, 10% of that is $1,200. Then you divide it by 2. So you can see there's a real big difference in terms of what kind of money you can make. So Jean, let me just read you this quote. I'd like to get your comment, maybe some other members of the roundtable, their responses. The quote is, the housing market is at a pivotal point as we head in the fall, said Lisa Sturvant, chief economist at Bright MLS, noting higher mortgage rates in particular. The decision between renting and buying will tip in favor of renting for some consumers, particularly in markets where rents are falling and new apartments are coming online. What do you make of that, Mr. Gruss? Is it because of high insurance prices in the state of Florida? We've discussed it multiple times. high property taxes, because obviously the value of your home goes up. That means you're paying more in property taxes. Even if you're homesteaded in the state of Florida, you're able to limit the overall increase, as well as simply just the cost of maintenance as well with some of these buildings. Is it going to get to the point where it's better to rent than it is to own? Like I made that comment on WLRN, our National Public Radio Service program a couple weeks ago, and everybody on the panel laughed at me that it's always better to own than to rent. Are we at that tipping point, or am I out in la la land?
No, we've been past that tipping point. I mean, it's been better to rent for the last year or two, honestly. I mean, when you add in the taxes, HOA fees, insurance, I mean, look at what insurance is doing. It's ridiculous. I mean, it's just a no brainer to rent right now. And there's a tsunami of apartments under construction now that they're going to flood the market. Thousands of units are coming online. And so that's going to depress rents. And to be honest, I mean, it's just a slam dunk, the rent right now.
Donna, John, would either of you like to add to what Mr. Gruss has just said?
From your mouth to God's ears on the renting. Because they need to start going down.
Donna, you own. What do you think? You are you going to defend the ownership, or are you going to go the way of Mr. Fakler?
Well, I mean, I definitely agree and I think that if if it were 2 years ago, I would probably be looking for an additional rental. But 2 years ago when I bought, it seemed like the right move. And I think I'm going to be okay. I think folks who are trying to sell now, I think if they bought like in the last 2 years, like while it was going up, I think they're going to be okay. But when I saw what mortgage rates are doing, it's dizzying. So